Hey everybody, welcome back to the Wealthy Idiot Show. My name's AJ, and today we're doing a react video of our best friend Dave Ramsey. Been getting a lot of comments recently about how I should stop hating on Dave Ramsey, so I want to make something perfectly clear. I do not hate Dave Ramsey. In fact, I think he's right most of the time. I watch his stuff and follow his stream, and I think that a lot of his advice is spot on. I often mention that if you struggle with consumer debt, you should probably lean towards his direction. It's not a good idea to do anything in terms of holding on to any kind of debt if you are just not in a place where you're capable of doing any of that responsibly or wisely. So if you have a problem with consumer debt, you have a bunch of consumer debt, or you just have a hard time not collecting more, follow Dave Ramsey. He's got good stuff, and a lot of our stuff is related to what he has to say about getting rid of debt so that you can get on this wealth building journey. We disagree on a few points, and so I like doing react videos where we get to pick apart the stuff that he says. That being said, I decided to do a react video where I actually agree with him in a huge chunk of this, and I want to add on more reasons as to why I think he's correct and some things that the caller could do, and I think it'd be fun to take a look at, so let's go.
Melissa joins us up next in San Diego. Melissa, welcome to the show.
Hi, thank you so much for taking my call.
Sure.
So my question is, my dad has a paid-off house that's worth approximately $1.4 million. He's thinking that he's going to have a forced retirement, possibly in the next coming weeks to months. In his retirement, my dad would not be able to afford the property taxes and the upkeep to remain in this property.
That's always a huge bummer, and it's very sad to me when this occurs. You have a really cool house. He's got a paid off $1.4 million house. I mean, that's awesome. But then he can't afford to keep it in retirement because he won't make enough in retirement to be able to pay the property taxes. I think that's a little messed up. Some places have some better laws related to this. Some places don't have property taxes at all. I think that, especially if you have a paid off house, I don't know.
My dad has done a lot with the property, and he doesn't want to lose it outside of the family. And my husband and I just had twin boys, which are now 10 months old. And my dad has recently proposed the idea of allowing us to take over the house and building a granny flat on the property that he would live in. My husband and I own a house, and we owe approximately $199,000 on our house. In the current market, we're estimating to get approximately $525,000.
All right, let's look this up real quick. Calculator. She thinks $525,000 minus she owes $199,000. So she's looking at about $326,000 in equity. That's pretty cool. Good job, guys.
For our house, which would net us approximately $300,000, which we would use to fund the build for the granny flat on his property that he would live in. And my dad recently got an estimate for the new builds. That would be approximately $340,000. So since the numbers are so close, we're wondering if it would be a smart idea to get a construction loan to fund the rest of the project.
Stop right there. We're calling Dave Ramsey Show, and you're asking if it would be a good idea to get a loan. The answer is going to be no. I can tell you right now. They're going to say no to this. But there's a lot of questions I have here, but I'm going to wait to respond to those here in a second.
Our expenses at my dad's house that we'd be moving into are approximately $400 more per month than the house we're currently living in. And that's just with extras such as like pool maintenance, landscaper, that kind of thing. And this is a way for our family to move into a bigger residence without having much of an increase.
This feels real messy.
This is going to end up costing $400 more a month? Or does she mean the bills are just $400 more than she normally pays? That's a little bit odd because she's saying that she has a mortgage on her home now, but there's no mortgage on the current home. So maybe she means in terms of bills, not in terms of like overall payments when it comes to mortgage and everything attached to it. Because that would be a crazy amount of bills to compensate for a mortgage like that. So yeah, I'm gonna assume she means the bills are actually higher here.
It feels like this is a recipe for disaster and resentment because you don't own the house and you're going to put $300,000 in for him to live in it while you pay all these extra maintenance fees. What's the plan for ownership?
We'd have to sit down and discuss like all the legalities, but basically, I mean, he owns the house outright, so it'd just be basically.
I think he needs to sell this house, downsize, and you guys live your life and move on.
Yep.
He didn't finish letting her answer the question. He just jumped in there and started talking. I want to know what the plan is. If he plans on actually writing the house over to her and she can own it outright, then I might be a fan of this. But then the dad has to know now that like his opinion no longer matters in terms of how this house works. And it's now her house, and she can now do with it that what she pleases. Now, taking care of your parents is important. And if they decide to go to the strategy of doing an ADU, additional dwelling unit, she called it a granny house, I think. I don't think that's a terrible idea, and I'll explain why in a bit. But you have to, like, even when it's family, you have to actually own, like, you have to transfer ownership. If you can't leave ownership in the dad's name and then pretend like you own something, because that's where you get into like really weird situations. Like you're going to dump a bunch of money in and he'll change his mind and he'll be like, I'll get you back at some point. Meanwhile, you're struggling to take care of two twins while your dad is like not really taking this stuff seriously. All that stuff is fuzzy. So he's got to transfer it to her outright so she actually owns it. She owns the equity. And I have some ideas around that too.
That just feels like the best plan for relationally and financially.
And I got to tell you, a big question mark for me, Melissa, was $340,000 for a place for him to live on the property. He didn't need that much space. I understand the cost.
Yeah,
I understand it's expensive to build.
That could be a big ADU, or it could just be an ADU in California. She didn't really say where any of this was, but a $1.4 million house in California is probably what it is.
Anything, but he don't need that big of a place. So that was a big red flag on top of everything else.
Okay.
And you're saying he's going to be retiring. Does he have money out? Because that doesn't free up any cash flow for him, really, other than what you're adding to it.
Yeah, no, he would just be living off of the retirement of what he has. But like I said, just with the way that the market is here, the price to move anywhere else would be, almost as expensive because he owns the house outright. He has like the solar panels, so he doesn't really pay much of an electric bill.
I'm not staying in the house because of solar panels, though. I mean, I just want him to could he get a place for $800,000, $900,000? Is he on his own?
No, it's him and my.
Well, see, that's what she's saying. He could turn around and get a place that's cheaper, but based off of some of the figures, it might not end up being really that much cheaper for him because he saves money right now on solar, right? So, I forget this dude's name, but he's not listening very well. But what she's saying is if he moves into a smaller house, he might be saving in terms of taxes, but then he might be paying a higher energy bill. So it's just a trade-off. So it might not be worth it to him, which is why he's starting to think of this strategy.
My stepmom and then my sister as well. She's just finishing up the last couple of years.
And he's got a family still.
Yeah, but they don't need all the space, is what you're saying. It's a giant house, it sounds like.
Correct, yeah. And then we're eventually going to be having to move up in house in a couple of years. So my husband and I were thinking we would move up in house in a couple of years.
The problem is you're at the whim of his decisions with his property after you've put in $340,000.
Mm-hmm.
So that just feels like it's going to get messy.
Even if we sat down and got if we were to end up selling the house, we would always leave with the amount that we put in.
Potentially, but even then, that's not an appreciating asset.
Yes. Oh, wait, what? Let me go back. All right, going back a smidge.
Always leave with the amount that we put in.
Potentially, but even then, that's not an appreciating asset. I'd rather.
An ADU is not an appreciating asset? I don't know what he means by that. It's definitely an appreciating asset. In fact, it'll immediately add value to the property as soon as it's finished being built because someone could want that for their family, put their family in it, or they might want to rent that out to offset their mortgage on that property. So that's a buying bonus for a lot of properties is an ADU, and it does add appreciation. Now, whether or not it adds that much appreciation, 30 or 40, I don't know the answer to that. We'd have to sit down and do the numbers. But it's going to add on over time. So if your house is worth now, let's say it creates 340 just to make it even, and the house is now worth 1.7 something, and you get a 4% appreciation on average per year, that's now included in that 4% appreciation. So I don't quite understand what he's saying here. You're gaining some appreciation with this ADU.
You get a house where the house is increasing in value instead of you just getting your piece back.
What happens?
Yeah.
What happens?
Yeah, the house is creating value. I'm confused about this part. I don't know what he's saying.
To the estate when he passes. I'm assuming he's thought through this and has got this in writing, yes?
Yeah, yes,
Who
correct.
gets the
So
house?
it's my sister and I that we would be splitting basically his assets.
Which, to split it, you guys would need to sell it to get money, correct?
Yeah, or he has other investments outside of the home. He has his retirement and some other stocks and stuff like that he has. So
It's just really messy, Melissa. Do you feel it?
I think that it's hard to let go because, like I said, we're thinking of moving into a bigger house and we can have a because the house that we live in now is only 1,200 square feet. And that's my husband and I, and then our 2 boys, so we would eventually move into something bigger. And if we can move into a bigger house.
Yeah, but you're moving into a place with family members. Now we're all one big happy family. Woohoo!
Are you guys debt
We don't
free?
get along. No, we have. Obviously we have the house, and then we have $60,000 on a student loan.
Okay, here's my plan for you. You have an emergency fund or savings?
Yeah.
Okay. Well, the baby steps would tell you, let's throw all the money at the debt except $4,000. Let's clean up this student loan. Let's get the fully funded emergency fund. Then let's start saving up for our next house. So that's what I would be doing. And maybe you could put $400 down once you sell this house and get a $700,000 house that would be more suitable for your family. So I'm going to run my own path. I'm not going to mess with the whole family estate piece. It just feels too messy. That's just my take. Appreciate the call.
Let's break this down a little bit. It is messy. Whenever you do deals with family members, it's messy. Probably not a great idea. She could do a couple of things that could, make this potentially a good plan. But that's iffy. It feels to me like this dad is kind of scheming his way into a better deal. Like he wants to downgrade in size of house, but he doesn't want to actually pay for that size of house. So he wants to maintain. I don't know. So. Yeah, this is real fuzzy. He wants to be able to live for a lot cheaper. And he's figured out a way where he can keep the home and live for a lot cheaper. That may be a problem because if I was in her situation, what I would do is either tell him, sorry, we're not doing this deal. It's not going to work. Like these guys are saying, it's too messy. This could get problematic real quick. Or you have to do everything real properly and by the books and on paper. In which case you might find out pretty quickly what he isn't interested in doing. So by the books it'd be like, he's got to transfer the ownership of the house over to her. This is now her home. She could do what she wants with it. She could turn around and sell it if she wanted to tomorrow. And he's got to be okay with that. Secondly is she's going to build an ADU on it, which is fine. And, they don't have the actual cash maybe to throw down on the difference of this ADU. But I'd tell him to throw it down. Like you don't have to run around and figure out how to take a loan out to get this difference so that you can build the rest of the ADU. It looks like she only has, after closing costs, she's probably right. She's missing about 40 grand. She's got to figure out where to get this 40 grand. But why can't he come up with the 40 grand? Like that would be his part in this ADU. A $40,000 home on this property. It sounds like it's going to be fairly large. ADU on the property, and if everyone gets along, and that's actually a good relationship, that could work out pretty well. They can visit each other. They still have the home in the family. They have all the equity. The other thing that they could do is they could turn around and refinance. If they actually own the home outright, they could turn around and refinance, take some equity out of the home, and do a really long-term loan, and then use that equity and then pay that off quickly. Or if it's a really low interest rate, pay it off slowly over time because there's no reason to worry about it. Invest the difference. And another thing that she could do that I just thought of, if she does own the house outright from her dad and she refinances in order to get that difference so that they can build the ADU, might as well refinance and get a little bit more cash out and pay off that student loan. So that way you're trading that loan out with a much lower interest loan. And then just the difference that you're not paying on that now is going to help them afford this house. Plus, they can take that difference and really start investing that hardcore so that they're all set up for their future as well. As far as the property costs, if I was able to move into a $1.4 million house and the only barrier was there's cost for the pool and the gardening, you better believe I'm going to learn how to take care of a pool and a garden real quick. I'll go mow myself if that saves me that much amount of money per month. I got that. They could take care of it too. and then, you know, the dad wouldn't have to take care of it because it seems like he's not interested in that, but you could save a lot of money. You go into solar panels so that you don't have to pay for the solar panels. They're already on the unit. So you're just enjoying the low cost energy without any of the actual cost part. I think that's outstanding. I think there's a lot of upside to this deal if they can actually sit down and work this out. And then I would do something where I would tell them like, hey, you know, if you were to move out and go to someplace much smaller than this, you know, someplace that you could afford, what would you be paying? And have him show you that. Like, okay, well, I'd go somewhere and I'd be paying $1,200 a month. Okay, well then give me $1,000 a month. We'll build this ADU. We'll put a refinance on the home. We'll get this loan out for you. There's no way that refinance is going to cost you more than $1,000 a month to get that 40 grand. Then turn around and build the ADU for him, and he gives you $1,000 a month, and you could actually be netting a little bit from that. He gets a better deal. House stays in the family, and he's planning on handing it over to the kids anyways, it sounds like. So it could work, but that's the only way I can think of that it's going to work. Otherwise, if I was in her shoes, I'd cut out. If any part of that deal didn't work for him, and he thought that he was getting kind of messed up on this deal, you know, in a situation where she benefits and he benefits, and he's still like, no, this doesn't work for me, then that's red flags. That is something you shouldn't do. Like these guys said, it's messy. Don't jump into it. You know, pay off more of your house. You got good equity. Sounds like you're doing good. Get that student loan gone so that we don't have to worry about that anymore. And then refinance into a bigger house. You know, I'm one of 2 boys in a family of 4, and we grew up in like a slightly over 1,200 square foot house. So it's doable. I mean, we grew up and left the house, and my parents still live there. So you know, it's not too small to actually be a thing. So, you know, it's doable. It may not be ideal, but you know, we're trying to get to this financial independence spot. So get rid of that student loan debt. If you can't strike a deal with your dad, stay on your own, stay in the small house, pay off, and then start investing, you know, intensely as much as you possibly can, so that when you're getting to the point in your future where you want to actually retire, you have the means to retire. You can be financially independent, and you're not relying on your kids in order to survive and making deals with them in order to survive. You can actually be independent yourself, and this never comes up as a conversation with them. So in summation, you got 2 routes, and neither one of them are perfect, but I think that they could work, you know, as long as the dad's on board. But I hope you enjoyed today's video. I agreed with these guys for the most part. I don't hate on Dave Ramsey. Think he's outstanding. Just think he's wrong in a few places, and I'm going to point out why. But overall, he's helping out a lot of people, and I hope you find our content helpful as well. So thanks for stopping by. I'll see you guys next time.